Well, greetings, everybody. My guest this month, for the second or third time, I can't quite remember, is Claudio Grass. Always an interesting man to talk to. He is a member of the same institute as me, the Mises Institute. He's a libertarian, and he's a gold expert. He's all things I am, only coming at it from a slightly different direction because I'm here in freezing Yorkshire. And Claudio is in Switzerland. I don't know whether he's freezing. He looks pretty jolly comfortable. More comfortable than me. I'm huddled upstairs. But anyway, there we are. So there's a few things to talk about, and not in a particular order of importance. And I'll just, everybody knows, has been listening to my podcast and stuff for some time, knows my views, but I'm not going to draw Claudio out a little bit, because we see things broadly the same way, but not quite necessarily exactly specifically in the same way. We've always been gold bugs. I've been a gold bug for decades, and I'm very glad I was. And of course, I'll just say one thing, and I've said it before, but I just like to kick off with this. Gold isn't an investment. Gold is a protection of your wealth. It's a store of wealth. And that's where we're both coming from, in very troubled and very difficult times indeed. So we need to look at that. And of course, gold has been money in some form for thousands of years. So we know that we're dealing with something which has a provenance, a pedigree, which is unchallengeable. It's a question is the hows, the whys, the whats, the wherefores. And I would like to ask Claudio just to see how he feels. It seems, correct me if I'm wrong, it seems after a long time of paper currency, worthless paper currency, fiat currency, for the last 50 years at the very least, and probably longer, it seems to me that the world now is beginning to look back, realizing and understanding that the only game in town is gold. In some form, in some format, which is why our central banks are accumulating gold again across the world. All the central banks are accumulating gold. And that tells me that something's afoot. What's your take on this, Claudio?
No, absolutely. I mean, I don't like JP Morgan. I only agree with him in one thing, because he said, gold is money, everything else is credit. So I think that's really the point. Gold is money, nothing else. And when we look at the current market, I mean, yeah, we can see that gold goes east, still. So, I mean, because the US dollar has been used as a political weapon, political tool. We are, back in the 90s, we were unifying the whole world. Now we're basically separating again. And so we can see that there is, I mean, when you think about, the interest rates hikes that we have seen, and the performance of gold, it's amazing. It just showed, I mean, nobody, all the other guys basically they expect that gold is going to correct with a high interest rates environment. This did not happen. And interestingly to me is also, when we look at US Treasury bills, I mean, since 2019, gold outperformed US Treasuries by 75%. So what I'm basically now expecting is, because, in the past, you always had these 60-40 portfolios, the magic formula, 60% shares, 40% bonds. And this formula doesn't work any longer. And so I think now, in the future, we're going to see more, high net worth individual or even family offices, some money managers who will understand that bonds have been defensive and that physical gold is also defensive, but that they basically rather replace their bond portfolio with physical gold, because it does, then it really acts as a stabilizer or stabilator again, it keeps it balanced. So I think that's where we are. But in the meantime, I mean, the biggest bubble we have is the bond bubble. And when I see what the governments are doing, when I see what's happening in Germany, when I see what's happening in the United States, everywhere, I mean, I just expect, they will destroy, the currencies. the euro, it's just a matter of time until we're going to see a sovereign debt default, especially I would say in the eurozone, maybe Germany. I've been to Germany a few weeks ago. It's terrible. I mean, it's really terrible. And
we have been told, have we not? Keynesianism has gone into modern monetary theory, and that debt doesn't matter. We've been having to listen to debt doesn't matter, and this has been a drum I've been banging for some time. Is that people seem to think, financial journalists seem to think, everybody seems to think, who is not really very well informed, that although debt matters to you as an individual, or me as an individual, or a small business, or even a medium-sized business, debt matters. You can't carry too much debt. Sooner or later, the reckoning comes. But what doesn't seem to be understood is that nobody, it doesn't matter whether you're a country, a sovereign country, or it doesn't matter. You can't go on racking up debt forever. And this is something that still, I would argue, hasn't come home to roost. And I was always surprised as a city man when I was in the city of London as an investment manager with a very big house. Of course, you seem to see, and it was amusing to me sometimes, you see a friend or a friend's son leave Cambridge University and pop up on Bloomberg TV giving his opinion at age 25, what's going to happen in the future. Terribly amusing as these youngsters come on. And it seems to me that both in the city and Wall Street, that these young fellows don't seem to grasp some of the basics. For example, we talk about bonds and we talk about interest rates going up. What is not fully understood, and it's really Janet and John, book one, that if interest rates go up on your bonds, the capital value of your bonds falls. And we just saw the Bank of England drop 180 billion pounds in the last 12 months because the capital value of their bonds has fallen so dramatically. So why would you buy something that's yielding 4 or 5% if the capital value is going to fall 10%? Yeah. And this isn't a mistake that ordinary people are making on the man on the Clapham omnibus or Joe Sixpack. This seems to be something that's happening to sovereign state treasuries and investment fund managers. They don't seem to get it, but surely it can't go on for very much longer.
Yeah. I mean, to me, it's really, I had to give a speech a few weeks ago in Munich, in Germany. And the title has been, are we on the final path to serfdom? And so basically I said, of course, we are living in serfdom already for decades, not since yesterday, because at the end of the day, gold is the money of the kings, silver is the money of the bourgeoisie, barter is the money of the farmers, and paper or debt is the money of the servants. And I think that's really where we are, when we see what these governments, what they're all doing to the people. I mean, we just have a lot of servants. They trust the government. They delegate their freedom, their liberty, whatever, to the government, and they hope that they will take care of them also in the future. And then, of course, you have the other guys, the ones who command themselves, who can think for themselves, who understand that freedom means self-responsibility. And so these guys are hard to find those days, but that's basically the audience that we are addressing. So to me, I think I don't know. I have the feeling we are going really into a very harsh period over the coming months. I mean, as you said, when you look at the stock market, whatever, I mean, it's everything is overvalued. We finance these markets with what, 15 years zero interest rate. I mean, roughly. And so the valuations are still up and running. So I think this is all an illusion which is going to disappear, because at the end of the day, I mean, that's anyway the most important aspect is always, it's never the scarcity of money. It's always a scarcity of goods and services. And when we look at the last 3 years, then we have done a very bad job in terms of producing goods and services. And in the meantime, we just injected more credit out of nowhere. So this is going to destroy the currency. This is also what Lenin said, you know, if you to destroy the bourgeoisie, you have to destroy their currency or their monetary system. I think that's where we are, because at the end of the day, what we are in right now, I mean, this is just another form of communism, Marxism, you know, and we all know from history what communism and Marxism has brought to the people. You know, it killed hundreds of millions of people, and it basically has driven, you know, the majority of the people into harsh scenarios, into, yeah, you know, no food, nothing. And I think that's what we are going to see in the future again.
Why, if you take the way the governments have been handling, all Western governments have been handling this, with quantitative easing, which you and I would call counterfeiting or money printing, you can call it what you like, with zero interest rates.
Yeah.
I always suggest that if this would work, if this was going to work, if this was a viable option, why would they not give everybody a little machine that we could keep in the attic and print money? And then we'd have lots of money. We'd go out and we could boost the economy every morning by going to buy whatever we wanted with our own little machine, which is what is happening. The difference is they turn their machine, the government machine, and they give it to the banks.
Yeah, I mean,
so that's all that's happening.
Absolutely. And what we are witnessing right now in the Western world, I mean, total credit is still expanding, total credit. But when you look at the bank lending, you know, they are contracting. So to me, you know, the money goes somewhere. So what they are doing right now is basically that with Corona, they try to destroy the small and mid-sized companies. You know, they locked them down, they put them into debt, you know, they took them out of business. The big ones were profiting from it. And now basically with these higher interest rates and, you know, less credit, I mean, they're just going to destroy the small and mid-sized company even further. And, you know, all the money is funneled into government sponsored enterprises and into government debt, so that they basically can redistribute the money. And that's what we are seeing. So, you know, whoever remains in this current system, I think they're just going to be impoverished and wiped out over the coming, you know, months and maybe years. I don't know how long it takes, but I mean, the trend is clear. You know, the trend, I mean, as I said at the beginning, you know, in Germany, I mean, there is no middle class. The middle class is really has been hampered down within the last, you know, 2 or 3 years. I mean, because they just have a tremendous amount, you know, they lost purchasing power roughly 30–40%, you know, and now they are facing, you know, all these higher prices, higher goods. They're taking away the energy, you know, they're blowing up pipelines. I mean, you know, this is all, I mean, the Western world is completely insane. The rulers that we have, I mean, they are talking about the Great Reset. You know, every 100 years we had a reset somehow by these sociopaths who are in control of this two-class society, you know, and I think now that's where we are again. And this time it's not the bourgeoisie against, you know, the bourgeoisie against how do you say the others? The Bolshevik Revolution, you know, it was about the revolution was bourgeoisie against the proletarians.
Yes.
This time, when you think about this time, it's basically woke and this critical race theory. I mean, it's still a two-class society, but now, you know, the oppressor is white, heterosexual, Christian. So we are the target. And all the other political identity Muppet Show groups, you know, the LGBTs and, you know, white and black and left and right and whatever, they are the oppressed. So whatever we are seeing, it's just, you know, it's the same idea. It's centralization of the economy. It's total control of the economy. And we all know a centralized economy cannot work because there are no prices. There is no, when you don't have free markets, you know, then it always leads to the misallocation of goods and services. So this is the outcome. So therefore it's not going to work. But I think we are in this process, and over the coming months, we're going to see, you know, that it will be, you know, the development is going much faster in the wrong direction.
We have an interesting phenomenon here in Britain, and I'm not too sure about mainland Europe, but certainly in Britain, where we seem to have divided into two classes, and one is those who work for the state and those who don't, those who work in the wealth creating sector. And it's quite definitive now, and it's ever since Brexit, where everybody in the public sector voted to remain, and everybody in the wealth creating sector voted to leave. That's almost foolproof. People thought it was to do with age or social class. That's completely and totally wrong. It was to do with were you in the public sector or were you in the private sector. Now, in the public sector, we have an interesting phenomenon. We have more civil servants. We have more civil servants today than we had when we actually administered the British Empire. The British Empire, the biggest empire the world's ever seen, not the longest lived, but the biggest empire the world's ever seen. We had fewer civil servants then than we have now, which is an interesting phenomenon. We have had 100,000 new civil servants appointed in the last 10 years. 100,000 in the last 10 years. One wonders what they all do. And of course, the other problem that we have is they have index-linked pensions. First of all, they're unsackable. There's no shareholder discipline. There's no productivity situation going on here. So you know, this is the problem. But the liabilities that we have are not far short at the moment of £1 trillion in public sector index-linked liabilities. Now, the CPI in this country at the moment is estimated at 8.5. Everybody in the country knows it's more than that. They know it's more than that. But the government juggle the figures to make it look like 8.5% by taking stuff out, like the roof over your head they take out. You know, that's not there. So they fiddle around with it and they call it 8.5%. But 8.5% is exactly what the public sector civil service pensions, and there's millions of them. It includes school teachers, workers at the town hall, all these people sucking at the public tit. And there aren't enough wealth creators to keep it going. You know, there are fewer and fewer people wealth creating in order to pay this. Nobody is talking about this. The BBC alone have estimated, which is index linked, their pensions are index linked as well, that the liability for people, BBC personnel, is somewhere in the region of £1.5 billion. That's just for the BBC. In my village alone, which is a tiny village, there's a score of ex-civil servants, ex-school teachers dotted around the village. We all know each other. There's nothing wrong with them, probably nice people. But they are retiring, all early retired, actually. All early retired, which you can't do in the private sector, of course. They get out in their late 50s, which is impossible in the private sector. And they've all had 8.5%. I've got a tiny Ministry of Justice pension from my political days, Ministry of Justice. And so it comes up with the rations. Every now and again, I get another £200 or £300 a month every 6 months. It's geared up. And that's happening to half the village. But they're not on a tiny Ministry of Justice pension. These people worked all their lives as school teachers or something. They retired on 50,000 a year. So it's huge. And they think they paid for that. They think, when you talk to them, they say, just a minute, Godfrey, I put in £300 a month into my pension. I said, do you know what that would be if you wanted to buy it? If you wanted to buy at 60, £50,000 a year, index linked, it would cost you in the region of £2 million. Did you put that in? No, of course I didn't put that in. So nobody actually understands numbers. Politicians don't understand numbers. Financial journalists don't understand those. When I was in office, the number of financial journalists I saw who are absolute morons. The average there's about two exceptions. There's Liam Halligan and there's another guy whose name escapes me. But there are about two who understand it. But ironically, they understand it but won't talk about it. Yeah, because they don't want to rock any boats. So we have a situation where we're sort of sailing towards the rocks. The ship of state is sailing towards the rocks. Nobody's talking about it. Nobody talks about public debt at an election. So when we have a general election, nobody talks about the public debt. Nobody talks when they're talking about income tax, or tax generally. Now in Britain, we are taxed the most highly since the war. It's the heaviest tax burden. And that's under a supposedly conservative government, which of course we know is a socialist government in point of fact, or statist, call it what you will. So all these things sort of come up, but nobody talks about it. Nobody's talking about it. And certainly what nobody ever suggests is that we cut public spending. Nobody suggests cutting public spending in this country at all. So there's 5 billion or 6 billion for the Ukraine. Lord only knows where that goes. There's 1 billion a month that we send in foreign aid, which is largely unaudited, and these index-linked pensions. We could balance the books if I was in charge in 2 years. It would be harsh. I would take a leaf out of Warren Harding's book in 1921, 1922. We're living beyond our means and we have to do something about it. And that is what you and I would have to do. You have to cut the golf club subscription, don't you? There's no new car, no expensive holidays. We've all been there, haven't we, when we've been a bit tight for money? We have to buy a cheaper cut of meat. All these things. Government doesn't do that. Government never does that. They never think, how can we save some money? So they squander it all the time. Which of course brings us both back to when. I mean, I know you and I have been expecting the crash to come by now. I mean, I called it 2 years or 3 years ago. I thought it had to have happened by then. You know, a total and utter visible collapse. We know that it's collapsing bit by bit by bit, but my experience of these things and my feeling is that suddenly when it goes, it's like a dam, doesn't it? You get a crack in the dam and the water comes through a bit by bit. And you can stand, if you were standing on the great the Hoover Dam and you look right down, you saw water coming out. There's only a crack, but it was only yay big. Yeah. You and I would get off it pretty quick, wouldn't we?
Absolutely.
Because it could go at any time.
Absolutely.
It seems that most people would stand there just admiring the view until they were sucked in with it. But it's timings. It's timings, you know, when it should have happened by now. And of course, you and I know that timing is everything, isn't it? If we knew exactly when, we'd all be sitting on a yacht, wouldn't we?
Yeah, I mean, you know, I think since 2008, I basically thought that the system is going bust. And I remember that I had a good friend of mine is Felix Zulauf. So he's also a money manager, Barron's Roundtable. And so I asked him in 2008, are we going to see hyperinflation? And he back then told me, Claudio, we only see hyperinflation once the people lose trust into the institutions. That will be the breaking point. And when we look around, I mean, you know, I think the trust into the institutions in the Western world is really breaking down fastly. But so, yeah, it's, you know, as you said, you know, we cannot print wealth. It's impossible. You know, we have to produce goods and services. I mean, money is a means to an end to buy goods and services. So it's over. I mean, yeah, the question is, you know, how long can this illusion be popped up? Because as you said, you know, I mean, the private economy is going down the drain. It's being destroyed even by politicians and their policy. And they're just blowing up the government sector. You know, they're bringing in all those people, making them dependent on government money, so that they also then go and vote, you know, in form of the government. But at the end of the day, all these guys are not productive. As you said, you know, they live off tax money. So when they kill the guys who are productive, and we are the only taxpayer in the country, the guy who is working in the private economy, you know, they steal our money, and we have to pay with that money, you know, these sociopaths who basically actively want to destroy the system we are in. And they really, I mean, when you think about the CBDCs, you know, the digital ID and all that shit, which we saw 3 years ago, is people were saying, oh, it's a conspiracy and so on. I mean, and now it's coming. It's all there. You know? So this is really, I mean, it's, to me, I mean, it's, you know, it's communism. It's really, it's the same Marxism way of thinking. So, and because it's central planning, you know, and all these intellectual idiots who truly believe they can play God, I mean, they are also going, you know, even these government pensions, they go bust, but you know, they most likely will be the last one who go bust, you know, before they steal it from the normal people, from the productive people. But that's why I'm saying, you know, so people have to make a decision. It's the same that we also have to leave the big cities. You know, we have to go a bit into the green, into the countryside, a little bit into the mountain area, you know, and basically take the money out of the banking system, because the banking system is at risk. Confiscation, all the stuff is going to be in the banking system.
I've always said to my subscribers that you have to take your money out of the game. You know, you have to get out. You walk away from the table.
Yeah,
as it were.
And you say it's not my Muppet Show any longer. You know, this is a Muppet Show. It's completely absurd. I mean, so that's why I always believe, you know, when I see the news or read what's in the media, I mean, it's completely absurd. It's really, I mean, for every thinking individual, it's horrible, because you cannot grasp that people are so stupid that they really don't even think or start individually to think once, you know, what is really going on.
We have our state school, indeed even our private school sector now is woke. So consequently, you have, and universities, of course, aren't places of education anymore either. It is the things that aren't taught are things like risk analysis or critical thinking. We don't do that as a nation now. We simply don't do that, and that's what we saw with the COVID problem. Nobody who's been through, I mean, for example, every GP, every doctor has been right through the school system, and he spent 5 years becoming a doctor or physician. But he is devoid of critical thinking or risk analysis. Otherwise, you know, why did they jab pregnant women? Why did they jab children? You know, why did they do all these things? When your doctor wasn't actually having anything to do with critical thinking or risk analysis.
Yeah.
And of course, the state goes, it's $20 a jab.
Yeah.
Well, you know, if you've got a mortgage and you've got children at school or college, your Hippocratic oath is going, it's the first thing to go, isn't it? Your Hippocratic oath is the first thing to go, and it's gone. And now, of course, that's another whole division of the professional classes who are in disrepute now, and they're becoming more in disrepute all the time. It's another chip away at society, the pillars of society. It goes along with the police, the education system. Nobody has faith in any of this anymore, except the people who are willfully blind, which sadly, of course, is a very significant percentage of the population.
Yeah.
Can I ask your view on something? It seems, what is your view of the Eurozone central banks seem to be trying to accumulate gold in the central banks as a percentage of GDP? Have you picked up on that at all?
Yeah, no, not really. I didn't follow that much because.
Okay, well, just out of interest, it seems that the Eurozone countries are trying to get to a gold reserve as a percentage of GDP, which you and I is ridiculous because GDP is a ridiculous figure anyway. But they're sort of trying to get to 3%, and I know that some of them are racing to get there as fast as is full. And I know you don't like. I know you don't like short-term tactical effects of gold. You tend to discount them a bit, as I do, because it's a long-term strategic value. But having said that, most gold has gone east, and now we have Western central banks feeling at long last that perhaps when the balloon goes up, a gold reserve is going to have to be there if they're going to restructure something else at some time. Which brings us right back. Sorry to do 2 or 3 questions in one. It begs the question, does it not? The Fed hasn't had a gold audit since the 1950s. One would imagine, would one not, that the gold price would have significantly moved given this significant Western central banks purchasing along with Eastern and Asian central banks. I know that gold is manipulated in paper gold. We understand that. But I would have expected gold to race away by now, certainly, if not now, quite soon, to a much more realistic figure with inflation and debt, so on and so forth. Certainly, I would say $3,000 an ounce. I would imagine in quite the near future. Do you have a view?
I mean, you know, first of all, I think, you know, as servants don't buy gold. You know, servants, they are invested and they use paper money and debt. So that's why, you know, I mean, even if you think about, okay, gold over the last 20 years in Swiss francs, you know, every year gold increased average 6.7%. If you look at the US dollar, every year roughly 9.8%. So gold was always doing what it had to do. But at the same time, we can see what is 2% of all the total wealth in this financial Las Vegas system is in commodities, and the other 98% are in stocks and in bonds. That's where the big bubbles are. And so I think commodity is completely undervalued. And one day in the future, it's going to shoot. I mean, gold is going, 100 years ago, an ounce of gold purchased you a house in Berlin. So when we have these resets, when they reset, one person's fortune is other person's wealth. So, and I think, this, and most of the people own something, but it's based on that. So I think these guys are just going to be wiped out. And what then will be left is basically, the oldest form of money, gold and silver coins. And then we really have to restart again. So, but when the system and this Muppet show, when you look at BlackRock and all these big crooks who basically can, they have so much capital under control, they can so much control, these global financial markets. So, really, the system has to blow up, and then gold is going to, then everyone will be happy, and we can restart, with gold, our new civilization, Because I think really, even 100 years ago, you really had to get out of the front lines, get a bit outside, have some gold, and basically then the people survived. So, yeah, I think, this is really the end game. Because it cannot work. There is cause and effect. There's cause and effect. And we're living in a world with cause and effect. Don't tell the intellectual idiots, because they have no clue. They believe that there is no cause for nothing. That's why we have a Big Bang. Yeah. So yeah, it's insane. But please, Godfrey.
Most of my subscribers who are following me and do their own research, I have a sort of a following which consists largely of people who are thinkers. They are critical thinkers. They are risk analysis in their own way. In the main, they're quite sharp, quite bright, and they are turning into gold bugs. And because my experience is, when somebody comes to gold from the traditional bonds and overpriced equities, and so when they do that, they very soon become quite informed, because they check things, they read things, they look at channels like this and other channels in America which specialize in gold, and some of whom are our old chums, like Alistair MacLeod and people like that. They like to who's been on my channel a lot as well. So they become informed, but of course, and we have systems for that for the smaller gold player, which are quite good in this country, and that's fine, and that's been working well. But when it gets bigger, for example, if people get to somewhere in the region of 250,000, 500,000, and they want to preserve that wealth from their stock or bond portfolio, it then brings in their ability, as it were, to go Swiss, if you will, yeah. And come to Switzerland, because that really is the sort of, it's the gold standard, if you will. Switzerland, nothing wrong at all with the people that we have here. They're fine, but of course, it's when you get into the big game, the really big game, you really want to be thinking about Switzerland is generally regarded as the home for the bigger bucks, as it were. Can you tell those subscribers of mine who are perhaps in the position to play the bigger game the advantages of coming to Switzerland?
Okay. Yeah, I think private property rights, especially when kept outside the banking system, are still the best. in Switzerland. And also I have a plan B, which is Liechtenstein, because also Liechtenstein, you know, there you have the princely family. They are classical liberals. They're hosting the Center for Austrian Economics, for example. And they have been, you know, their wealth has been confiscated by the communists in the past. So they understand what it's all about. And so the royal family there still has a veto power. So I think, I mean, I trust Switzerland. I mean, we have seen with Credit Suisse, you know, there are no private property rights in the banking system. You know, I think that's pretty clear. But I told my customers also in the past, you know, as long as you are in the banking system, there are no private property rights. But here in Switzerland, especially outside with private companies, that still works. And at the same time, I mean, Switzerland, you know, we have 70% of all the gold refining still goes through Switzerland. So we have a long-term gold history. And when you look at the individual in Switzerland, we are the guys who hold the most physical gold on the private level in comparison to all the other countries. And on the other side, I gave a speech 2 weeks ago, you know, a few weeks in Munich, as I said, and there I was looking. I told the guys, listen, you have to understand that I'm a cow Swiss, you know, because the symbol of the cow became a threat for the monarchies between the 12th and the 15th century, because during these 200 years, you know, the cow Swiss were basically butchering, you know, the monarchs, but also their servants. Whoever wanted to take away our freedom, you know, we basically killed all these guys. So what I want to say with that is that Switzerland is, when it comes to individual liberty and freedom, it's the country with the longest experience when it comes to that. So it's still part of our culture, you know. And even when I see what's going over here, I mean, yeah, we have quite a big community which understands what's going on. I mean, these guys are going off grid, you know, they're already checking out where to go in the mountain areas, and basically prepare for, you know, the breakdown of the current system. And so I think, because I always said, you know, when the system comes down, it will be also a cultural thing. And so the Swiss culture is still, you know, everything is based from the bottom up. You know, we used to be organized in communes, but we never had a king. No, we never had one president. We have 7 presidents, you know, this division of power and so on. So I think we still have a lot of Swiss who still have those principles of freedom and liberty within their DNA and within their genes. And on the other side, I mean, as you said, you know, I mean, we only have mountains, we have harsh winters, we have summer. So Switzerland, you know, we don't have oil, we don't have gold, we have nothing. But we became, you know, a banking place, protecting the assets of the customer. You know, a word is a word. A Swiss banker you basically could trust in the past. I mean, today we have more international bankers than Swiss bankers, of course. So that has changed. But I think, yeah, it's really the jurisdiction, it's the private property right protection. It's also, you know, the whole infrastructure that we can offer. You know, we have private companies, AAA high security storage facilities. Everything is fully insured. You know, we can buy in the format of the customer's choice. And he basically really can have his bank account in Switzerland, but without being with a bank and without being exposed to fiat money. You know, they can hold their wealth in physical precious metals, and then whenever they need money, they can basically liquidate and cash in. So I really can recommend, you know, that people look into a possibility that Switzerland might be a safe haven. You know, because we never had the gold confiscation, and even during the Second World War, we were the only country which had to operate on the gold standard, because the allies and everyone was asking that Switzerland remains on the gold standard. So we always have been a kind of a special place, and I think that's, you know, you never have 100%, but I mean, look around, where do you want to go elsewhere? You know, I don't see any. I mean, New Zealand, we thought back, you know, New Zealand might be an idea and so on, but look at the whole Commonwealth. It was just horrible. It was totalitarian, authoritarian, what happened in the Commonwealth. So I think these places are not an option any longer for the future.
Frightening, I have to say, when you saw in Victoria State in Australia, policemen beating up ladies for not wearing a mask. I mean, I was horrified. I'm old school. I'm an old man, I'm old school, and I didn't see Australia as that kind of country at all, or New Zealand. It was a sort of land of the free, if you were.
Yeah.
No, I was absolutely stunned and horrified by the whole thing. Well, that's been most interesting talking to you, and we'll talk again, Claudio. And for those of you who are interested in what Claudio's got to say, there will be a website on my website. Will carry, not quite yet, we're a week or two away, everybody, but it will carry exactly how to get in touch with Claudio if you want to, if you feel that Switzerland is suitable for you and your family. And we'll give all the links that you need to Claudio there. Also, if you want to get in touch with me via my website to ask any questions, I'll be happily. I will get to you if you have questions. I always do. I will get back to you and answer as best I can. And if it's specifically for Claudio, I'll pass them on to Claudio, and I know he will answer them as well, or on my behalf. So, Claudio, once again, thank you very much indeed for coming onto my channel. Always interesting to talk to you, and we'll talk again soon, I hope.
Godfrey, always a pleasure. Thank you very much for taking time, and stay free in the meantime.
Thank you. As most of you know, my work is very heavily independently research-based, and I get my information from all over the world. It would help if you press the subscribe button and the little bell next to it, because the more subscribers I have, the more likely it is that international independent research institutes will share their material with me. It's most helpful, and then of course I automatically share it with you. So, surprise, won't cost you anything. Thank you very much.